Right, good morning then, folks. We head into European trade on Thursday the 25th of January. We'll flick across markets to see what's going on, and it is the last of the central banks out this week. The ECB, we did at the Bank of Canada yesterday. We'll have a look at that once we get around to it in a minute. Apart from that, the headlines: Chinese stocks bounce back. Chinese stocks surge for a third straight session. Obviously, I was talking the other day about $280 billion worth of stimulus measures to be pumped into capital markets in China. Obviously, that is then a positive for the Chinese stock market. Does it improve the economy? That's a different question. We'll have to see. But markets taking a bit of having a bit of positivity off the back of that. You see dollar treads water ahead of US GDP ECB meeting, and that's kind of where we're looking at the moment. Kind of main focus of attention is the central banks. We had the Bank of Canada yesterday, and we then have the euro today. I'll get back to that when we have a look at the calendar now in a second. But markets relatively mixed, not much going on in the overnight session so far. You can see US equity futures, European equity futures, Asia Pacific equity futures, a bit mixed. Asia Pacific, I suppose they're up across the board, aren't they? CSI Chinese index, and then the Hang Seng is up 2% to 1.6%. So solid gains for those two. Rest of the markets or rest of the stock indexes doing pretty much nothing, aren't they? US yields lower across the board. US dollar is a bit choppy. You kind of no real direction one way or the other. You can see a few green, few red, so I'm not going to read too much into that at the moment. Yields aggressively higher towards the back end of yesterday. Bit of a pullback off the back of that, so I wouldn't read too much into them being down either. You can see your Aussie, it's higher across the board, but the biggest amount that's higher is 0.19% up, so it's not exactly that strong, really, is it? The Japanese yen, weakest currency across the board, but none of them are really down by much. None of them are really down by much either. So there's not much for us to see here, to be perfectly honest. FX across the board isn't really doing too much. Stock indexes across the board pretty mixed, apart from Asia. Not a lot to go off other than the central bank decisions. Bank of Canada yesterday, no move towards having rate cuts, but they did drop their language, saying that they would hike further if necessary. Reason why they would hike further if necessary was obviously due to the fact that they're still trying to get inflation under control. But inflation minus 0.3% over the month of November, which is the figures we got last week. That is a number since their previous meeting. The fact that inflation continues to push lower. We've had a number of other economic data prints from Canada be somewhat negative, below consensus, also a bit negative. So, economic data throughout Canada has not suggested that statement should stay in, and they have then dropped that statement. They do say it's premature to talk about interest rate cuts, but they have come out and said that they will not hike again. Previously, they were open to hiking again. Now they have removed that commentary and do not say that they will hike again. So, before the release, they were not going to hike again, obviously due to the economic data. If you have a look at the economic data prints, does not suggest that a hike is warranted. You could have told you that yesterday, but they have gone and confirmed that. The next move in interest rates from the Bank of Canada is to be a cut. When that comes is a different question, but they didn't communicate that to us, just said they are not going to hike anymore. ECB then today, I think ECB is probably a slightly different one. They're probably likely to stick to their hawkish rhetoric. Inflation picked up recently a little bit in the Eurozone. That's likely to remain for another month or two, and they've had a bunch of comments out from some ECB officials so far this year, kind of pushing back on interest rate cuts, keeping with the higher for longer narrative, just to kind of keep markets in check, you would imagine. So I would imagine something similar along those lines. They've had a few comments from a few of the officials, Christine Lagarde as well, suggesting that they want to see wage data over the wage settlements over the course of the first quarter. Those figures become available in May. Now, markets were kind of 50-50 on when you will get a cut from the ECB. April or June are the two meetings that markets were looking at and pricing in interest rate cuts for at some point this year, whether it be April or June to start off. Now, that wage data, if they're going to sit and they're going to wait for that wage data, if that comes in May, kind of rules out April then, doesn't it? And then that kind of looks at June. So that's what we'll be looking for. Any sort of language on when we might get cuts, or do they just completely flat out deny it again and say, we're not looking at cuts, talks haven't started, made no decision on that just yet, then we're back to the economic data. But a big drop, big drop in inflation. Okay, it popped higher over the last month or two, but that move lower was never going to be linear. Economic growth throughout the eurozone is not good at all, and there's a couple of reasons why they would not hike interest rates again, or at least start to look at cutting interest rates. But they still got a little bit of work to do, in their opinion. Kind of want to push back on any sort of idea that they will cut interest rates. GDP then out of the US, consensus for 2%, so a bit of a drop on the 4.9% in Q3 of last year is the advanced figure, so we will keep an eye on it. But 2% growth over Q4 is certainly not bad. I mean, it's the slowest growth in 6 quarters from the US, but still 2% over the course of a quarter is still solid economic growth. If you come in and beat consensus, you might see a bit of US dollar strength. But ultimately, we were looking at Monday US dollar weakness. Like, I thought the kind of bout of strength was a little bit overcooked. Equity markets continued to rally, and the dollar has been somewhat negative over the course of this week. So if the ECB do come out somewhat hawkish, you do 15 minutes to kind of regather your thoughts in between the ECB and then GDP at 1:30. If the ECB do come out somewhat hawkish and do start pushing back on rate hikes, which is probably the expectation, and you come around to those US economic data prints and they are negative, well, that is then a reason to get long euro dollar. So I think on the balance of probabilities, if you can get long euro dollar, maybe even small risk at the beginning of the day, look to hope to ride a move over through the two of those data releases. I think that's probably a good bet. Again, is it a guaranteed bet? Absolutely not, but I think it's a good bet. Long some euro dollars today. Wouldn't surprise me if euro dollar ended up higher come the close of play today. You can see the US dollar kind of all over the place at the moment. More weakness than strength. You can see the Aussie not doing too much, but the Kiwi is popped higher, Euro popped higher, Sterling popped higher, dollar Swiss, dollar yen, both lower. Dovish Bank of Canada yesterday, obviously that pops. Our cents dollar CAD to the top side, solid downside. Kind of after we shut off yesterday, 6 o'clock yesterday evening. Somewhat, pretty interesting moves. I don't think it was driven by any sort of catalyst, just a bit of a sell-off. Obviously, the market is not going to continue on at that pace forever. It does have to have a little pullback at some point in time. That point in time came yesterday at about 6 o'clock. So your S&P, your Dow Jones, your Nasdaq and your Russell all pushing lower. Not dragging European stock indexes with it. Interestingly, we'll see how they play out into the ECB a little bit later on. Wouldn't surprise me for a bit of downside for those two in today's session. Yields pushing lower after an aggressive push higher yesterday. Yields pushing higher yesterday, contributing factor to stocks moving lower, but it took stock a couple of hours later to get going. And then US bonds. Oil continues to grind higher, which interesting. Was back now above 75. Geopolitical tensions, reduce supply does kind of make what is supportive to a certain extent for oil. Those geopolitical tensions out in the Middle East not really affecting the price of oil, but the fact that it's happening is keeping it somewhat underpinned. So no massive rally, but it's still grinding to the top side. No wonder do we get a break to the top side at some point on the price of oil. Apart from that, there's not really much else to talk about, I don't think. Euros will be in focus today, dollars will be in focus today, and then obviously US indices and European indices will be something to keep an eye on. But ECB 115 today. Have not got much out apart from that, so we will keep an eye on ECB 115. US data at 1:30. ECB's press conference at 1:15. We'll update a little bit later on how they get on. But if you're going to take a bet right now, I think euro dollar's higher come the end of the day. It wouldn't be a bad one. Let's see, does that play out over the next few hours.